Welcome to the CPA Revolution. I'm Jose Ortiz. I'm the founder of the Scale Collective. This is where high earners come to get their information because usually they won't get it from a typical CPA. I'm here with my co-host, Miss Sharina Padilla of Engineer Tax Services. How are you doing today, Sharina?
Hi, good. We're doing great here. Sharina Padilla with Engineer Tax Services. This is where we bring the latest and greatest information about tax legislations and also talk about strategies that are a good fit for you.
Right. And it's been a while since we talked, Sharina. I know you were on summer break. I was on summer break at some point, but we did get some really, really big news on the 4th of July. Of course, HR1 passed, aka the Big Beautiful Bill. What kind of things have you been seeing from your client base regarding the passage of this bill?
Yeah, definitely. I've seen a great uptick with the number of inquiries and requests for different items related to real estate and also research and development tax credits. So things are moving quick and people are getting the information that they need to make sure they're making the best decisions for their business before the end of the year.
Right. And, we're going to touch on, because obviously we don't want to just go on like anybody else, any other CPA, and just talk about the bill and what it includes, all that boring stuff, right? That minutia. What we want to do is kind of talk to you about how to use this opportunity strategically, right? So that it works for you moving forward. But first, let's talk a little bit. I want to touch upon what changes there were to bonus depreciation, which, Trina, you alluded to in regards to cost segregation. So basically, what happened is that the bonus depreciation was restored and is now permanent. Now, what does permanent mean? Permanent means it's permanent until the next lawmaker comes in and changes the tax law, right? So that's basically what it means. But in any case, it's 100%. We have 100% bonus depreciation that's been restored. And it is actually for 2025, but here's the caveat. And this is one of the first things that we kind of need to know is this is for property placed in service after January 19th. Now, that might sound a little bit familiar, right? Well, it's because that's when Trump got inaugurated, second inauguration, January 20th. So anything before the 19th, it does not necessarily apply. It'll be the 40% bonus depreciation that we were accustomed to. But anything after January 18th qualifies for 100% bonus depreciation. So make sure that you talk to your advisors, your CPAs, and whatnot. And if you don't have that, feel free to reach out to us. All right, so let's get into that. So basically, it's 100% bonus depreciation. This is a great time to re-strategize. Talk to me a little bit, Tareen, about the questions that you've been getting, maybe some of the errors that people are making that have made since 2017 when this first came about.
One of the main things is it's that real estate professional status. Like we really saw a lot of investors miss the boat because they really didn't understand the real estate professional status
Right.
nuances with what the hourly um, criteria was for those.
Yeah.
So now we are past that. We understand what's going on. We're able to actually put the parameters in place and strategically work with the clients and their CPAs to make sure that they're keeping the logs and that they are doing what they have to do to make sure they meet that requirement and we can all do our due diligence and not open the can of worms for liabilities or things like that.
Right. So it's
Um,
really, really important, I guess, that they have a CPA who understands all this, right?
correct. And some CPAs, like just like we have in the medical field, they're not specialized in real estate investments, right? So you need to find and work with a CPA that is familiar with your line of business. Just like you have in the medical field, you have a podiatrist for any issues with your feet, you have a cardiologist for your heart, you have a dentist for your teeth. Same thing works with CPA. So find a CPA that is familiar with the real estate items and are able to maximize your benefits by looking at other things that normally wouldn't be common for other specialties.
No, and that's a great point. It's a great segue actually to what we want to talk about. What I want to kind of bring to our listeners, these high earners, is what are the mistakes that were made with the 2017 legislation regarding bonus depreciation so you don't make the same mistakes for this new opportunity. So the first one that you touched upon is basically kind of what I was going to talk about here is where real investors create these, they'll go ahead and they'll listen to somebody on YouTube or whatever, Instagram, and they'll go ahead and call their CPA. They want this 100% bonus and all this other stuff. But the fact of the matter is, unless the CPA knows the criteria for that person to qualify, then they can get in trouble. And what do I mean by that? It's let's think about this. You obviously do cost segregations at engineer tax services. So basically, they'll call and get this cost segregation done. The engineers will come out. They'll do all this stuff. Perfect. You guys do a great job at that. But then what happens is the client learns, well, hey, I'm a W-2 earner. That's active income. The losses that were generated from a cost segregation typically are passive income, and there's a couple of nuances there we'll talk about in a second. And what that winds up happening is that they cannot use those losses against that active income. Have you ever come across that? I'm sure you have.
I have, yes. This is a very common situation that comes up. And it's so important to have these conversations ahead of time, right? Because the strategy, it's a powerful strategy. But if you're a passive investor, there's different ways that we can look at the planning to make sure that you are maximizing the benefits. So not all is lost if you're a passive investor. You could still take advantage of cost segregation, but it's going to take a few other items that need to be taken into consideration. Like, for example, grouping elections. If you're planning on selling a property, like what can be done to minimize recapture, or once you have sold the property, how that also translates into your active income, and now you can harvest all of those losses. So, but there's things that need to be set up beforehand to make sure that you are maximizing the benefits at the time that you're ready to do so.
Right, Trina. I think what you're alluding to is basically that active individual. Let's just say you have a W-2 job. You get this cost seg because you have a rental property. How can we use this opportunity, this bonus opportunity to offset your active income? Well, there's a couple ways. Number one, there is a $25,000 election that you can make. So basically, what happens is you get a cost segregation. You have, let's say, it generates a paper loss of 40,000. Typically, you won't be able to use that if you're only active income. However, if you actively participate in the rental, meaning you own more 10% or more of the rental and you actively participate, then basically you have that 25K deduction that you can use each year. That's the first way. The second way is through real estate, and you mentioned this professional status. That one, it's a higher threshold to meet. So basically, you're going to have to meet the 750-hour requirement. There's several more. So it's a lot difficult, more difficult if you are a full-time employee. Now, what do some of my clients do? Well, if they have a spouse who's willing and able to do that, they'll go ahead and she'll become she or he will become the real estate professional, right? And they'll obviously work with a CPA who's knowledgeable in real estate so that they make sure that they get it right because it has to be very well documented. The IRS already knows that this stuff is kind of like a red flag. So they're going to be looking
Mhm.
at those schedules, those all those things that you put together, the calendars and all that, in order to justify to make sure that you meet that threshold for real estate professional status. So it's very, very important that you focus on that. So yeah, first mistake, basically, you're getting into things where you don't know definitely what the rules and the boundaries and the limitations are. And that's one of the probably the biggest mistake that you can make is going into this blindfolded. All right.
Yeah.
So second,
What's your
yeah, go
your
ahead.
take, Jose? I'm sorry to
It's
interrupt.
okay.
What's your take on the short-term rental loophole?
It's another viable strategy, and thank you for bringing that up. Again, but it's an Airbnb. It's a rental. It's a business, and we still have to treat this like a business. A lot of people that I've come across don't necessarily understand that. So the
Hmm.
thing about the short-term rental, the loophole is that if you rent out that vacation rental an average, and I said an average of 7 days per year, then basically the IRS says, hey, we're considering this a business. You can actually activate those losses against that income, and you'll be able to take advantage of that bonus. Depreciation.
And that's where, I always say seek guidance and make sure you have a professional working by your side to make sure that you're checking all the boxes.
That's right. And that's what we're trying to do here in CP Revolution is kind of create that awareness for you to take that next step and know where you need to go in order to get the best advice that you can. So, number two, of things that I've seen in the past is where people don't necessarily understand Section 179 versus bonus depreciation, right?
Mhm.
Section 179 has phase outs, has limits, and a bunch of other things. Bonus depreciation is already included as a default unless you elect out of it. So basically, you have an opportunity to use a combination and strategize using these tools in order to take advantage of these opportunities. A lot of people
Mhm.
don't understand that, so they'll just either go off and they go to TurboTax or whatever they're doing, and they'll Section 179 because they heard it on Instagram or on TikTok or whatnot, not understanding that there's bonus or vice versa, not understanding 179 and basically how we can use this to strategically help you save tax and build wealth. So again, it always goes back to getting the right advice. You hear something on social media, perfect. We all do. This is, it's great. It's a bonus that we live in this time and you can kind of get that information. However, that's not the full story, guys. And you got to remember, a lot of these people are just trying to get you into the door, right? So I would tell you that if you hear something that piques your interest, pick up the phone, call your CPA. If your CPA does not understand this, guys, it's time to find another person. I mean, if you're making, if you're a high earner and you're making money and you want to keep that money, you have to do the right thing for you and your family. Pick up the phone, call a tax strategist or someone who's qualified. The third one that I have here is, and you mentioned this earlier, Sharina, is business owners don't plan or high earners don't plan on uh, depreciation recapture. So let me walk you through a little bit of that. So depreciation recapture. I don't know why I can't say that today. Gosh, is basically where you let's just say you got a cost seg through Sharina through her company, and then all of
Mhm.
a sudden in a couple of years you're like, oh, I want to sell this property. All right. Well, the
Mhm.
problem with that is that when you use bonus depreciation, what happens is think about it like this: the IRS is saying, "Hey, I'm going to let you get an advance on that depreciation, on that paper loss, right, in year one.
Mhm.
So I'm going to let you get that opportunity. However, if you sell, right, so you have what 3 year, 5 year property, 7 year property, whatever it may be, within that rental property. If you sell, say within a couple of years after that, guess who wants their money back? They want to share that, right? Because they're giving you that advance. So they're going to knock on your door. They're like, sir, I need, if this, and we're talking about if it's real property, I need 25%. They're going to tax you 25% back, right? Based on whatever the depreciation was. So they're going to want that back. Now, let's just say you sell for profit, right? So you have to obviously pay that depreciation recapture. But then what happens if your gain was above and beyond that? Well, then it's taxed at long term capital gains, right? So 15, 20%. So that's how that works. If it is personal tangible property, then kind of gets worse here. Depreciation recapture is all the way up to your ordinary tax rate of 37%. So you can see where this might throw a wrench in your plans, right? If you're kind of trying to strategize at home, strategize for yourself, and didn't anticipate that tax. So it's kind of usually a surprise for people at the end of, once we're filing out their tax returns or they're just coming to us that first year. They're like, oh my God, I didn't even know about that tax. Where's this coming from? Well, that's what it is. Have you come across anybody who's kind of complained about that or was taken kind of like by surprise by that sticker shock?
All the time, all the time. And I always try to bring the solutions to the table and make sure that everyone understands that there's also other ways to handle those situations. So if you are facing some type of recapture,
Right.
uh, tax liability, reach out to us or reach out to your CPA because there's different things that we could do. Most of the common ones are the 1031 exchanges, but we can also do a reverse study or a purchase allocation study to minimize those
Great.
um, that recapture. So ask questions. At the end of the day, we need to communicate And sometimes, we wait until we actually have a problem at hand and start looking for solutions too late, right? So
Right.
we want to make sure that you are proactive and not reactive.
Right. Exactly.
So make sure that you understand what are the pros and cons as you implement these strategies and that you always have an exit plan in place.
And that's a great point because, and I tell my clients all the time, you're not only strategizing to get in, you're strategizing to get out, right? So if you're missing either one of those sides, chances are you're going to get hit with some surprises. So that's a very good point. And you guys got to remember, this is not a loophole, right? These are
Mhm.
strategies, right? So obviously, if you're waiting until the last minute, you're definitely not strategizing. If you're waiting till the last minute to kind of ask your CPA, hey, what's out there that I can use to reduce my taxes, that is not strategy. Strategy starts the year before. So, for
Mhm.
example, we're talking about 2025. When should we be tax planning for 2025 taxes? Today,
Right now.
right now. Exactly.
Yeah. Yesterday.
Yesterday. Exactly. So, and then my last point here that I've kind of seen too is that, and I'm sure you found this. This is a great one. So you have these guys, high earners, making a lot of money, don't know where to put their money in order to save taxes, right? They'll go on social media, they hear one of these guys talking about how great, rental real estate is and all this other stuff, and they just get swamped, they get pulled in. They start buying things without even understanding what they're buying into, not understanding the
Mhm.
investment, not understanding the nuances of each type of investment. So let me give you an example, and this is from your experience.
Mhm.
Rental property, 27 and a half years, right? Standard thing. Storage, which one would you say gives you the best results when you do a cost segregation? Would it be storage or would it be a rental property? Now, I would say storage. Why? Because there's a lot more components that have shorter depreciation lives, and you can get a bigger jump on that bonus depreciation. With a property, you don't know what you may have, right? So it all depends. But typically speaking, something like a storage facility will give you better results. That's been the historical trend. Have you seen that on your end, Shirley, Serena?
Definitely, definitely. Depending the asset that you're looking to invest in, there's going to be a wide variety of benefits. Um, Real estate rental properties have always been like on the average side of 30 to 40% reclassification. Storage facilities are closer to 50-60%. And then if we get into gas station and car washes, well,
It's another one.
that's just another one. So it just depends on what you're looking for, what you're familiar, because obviously you don't want to get into a business that you are not familiar with it, right? It's
Absolutely.
completely different running a convenience store and a gas station than running a residential rental. But at the end of the day, we want everyone to get educated to figure out what are their talents and what
Yeah.
they're willing to invest their time on, because at the end of the day, it's all about how we are distributing our time throughout the day, whether we have our own business or we are running different businesses. What do you like? That's pretty
Exactly.
much where we want to start and make sure that we understand where we are now and what that end goal is. And then we can bring the different strategies to make sure that you are diversifying your investments in areas that you're comfortable with.
Yeah, and I would say, if you're looking to do something, obviously you're trying to, save tax on some of the high income you're earning. You know, yes, you have, the investments, but then you have on the other side you, right? What are your risk tolerances? Where are your capabilities? What's your superpower and so forth? Because I always tell my clients, you want to invest in something that you know. All right. Obviously, a lot of people jump into this without knowing. That's okay. But you want to get as much information ahead of that investment decision because you want to know where it stands and how it compares to other possible investments for you. So this is again somewhere where you can work with a CPA, a tax strategist like myself, and kind of determine where. where is your sweet spot as far as if you're going to make an investment? What would make you happy? Number one, what would make you feel kind of at ease? Like I said, you have different risk tolerances, so you're comfortable with the decision. Number two, what are your end goals? And will that investment take you there or help to take you there? Because really, there's only one thing, and that one thing is that we want to save money on tax, right? We want to save money on tax so that we can have a better life for you and your children and so forth. So, does it meet the end goal, right? So, two different things that you want to look at, and then number three, are you ready for it? Are you ready from a financial standpoint? Some people get into these things and they just want to save money on tax. But guess what? You may not be ready. You may not have the capital to invest. If you're borrowing from John to save money on tax, that's not a good thing, right? So we want to make sure that you work with someone who obviously can guide you, right? Can help you understand, what your investment appetite is and so forth. And then you want somebody to give you options, right? Because when you hire a CPA, you should be demanding an ROI, right? And this is how we get you there. So, Sharina, that's all I have. I don't know if you want to say anything else there regarding this bonus, 100% bonus appreciation.
No, I mean, it's a great time of the year to start investing if you do have the capital to do so. And we want to make sure that you're asking the right questions to make sure that those investments are going to be the ones that are going to take you to the next level. So always happy to help and offer that guidance and obviously with the advisory services, we want to do right by you.
Excellent. Well, thank you again, Miss Sharina Padilla of Engineer Tax Services, and thank you everybody who's listening. We really appreciate it. If you find yourself, if I've been describing you during this whole show, this whole episode, please reach out to us, the Scale Collective, and we can kind of start guiding you to where you want to be. Sharina, thank you again, and we will see you next week. And I think we're going to be talking about another great strategy, research and development.
We'll talk about research and development and all the great benefits that now we can obtain doing the look back studies for those of you who have been investing in innovation. So looking forward to our next.
There you go. All you innovators,
Yeah.
make sure you show up next week. Thank you again, Sharina, and we will see you on the flip side.